All right, guys. So we're good to go. How are we doing? Wayne insists I drop the old disclaimer on you. So this is not alert service. No trade recommendations. No silliness on your part. We'll conduct some live fundamental technical analysis, put together a trade plan of 5. Trading heavily leverage risky, don't do it if you don't have a track record of successfully using your broker's demo. Past performance does not predict future success. I hope that you enjoy this presentational. So how are you guys doing? What I wanted to cover today, and Mr. Ponzi's right, I caught the last few minutes of what he was saying about asking questions. I mean, it just stands to reason. Get something on your mind. Let me know and we'll answer it as best we can. All right. So remember, first of all, I just put an alarm on this pound. Let me just talk about this very quickly since the market is moving. We might as well do this trade together. You missed pips. I'm pretty good, thanks. We might as well do this trade together here if it comes to fruition. So what I think is likely to happen is we'll probably see one more. I don't know what this is about. If you're looking at the 4 hour here, it does look like we have one little nudge to the upside. However, notice how the Bollinger Band's been forced open. It wasn't really open through implied volatility. It was more open through just raw price action. So that often implies that you're going to get a pretty good little snapback, which I expect. But it does look like I was worried today that we were going to do this and pop down like that to hit up. But, we've broken out of this now. It's pretty compelling looking. So I'm pretty sure that we can do this little trade here if we were so inclined. So what I've done there, I like to use I think we could go here to sort of late 57s or so. I like to use the hourly for continuation plays. And when I see something like this, massive gap between price and where the Bollinger and this 5 EMA is. This 5 EMA is like its little partner in crime, He's not going to go into anything too far from his friend. So we've got to get at least 60% of the way from the price at its high to where this 5 EMA is, where it's set at the candle open. And that'll give us a decent sort of continuation level to go from, right? And in this case, aggressively, it's the Bollinger Band. But looking at that 4 hour chart, I would think that we probably have to see something in the vicinity of 70 to 80 and to long it. Ideally, we'd like to see something more around the 60 level because we have more confidence there in the way of previous swing highs and the sort of junk in the trunk. So we'll watch that together. How's that sound? Cool. Hey, George. Good morning. I actually checked on the bees last weekend. I meant to tell you. But, all right. Okay, so the actual reason why we're here today was to talk about, I like to try and mix in the live stuff, otherwise market commentary is nice, but making money is better. So, all right. So the whole point of this webinar today was to continue. Remember last month, we started talking about sort of a couple of favorite setups. Do you guys remember that? And I said, if you need a copy of this document, just email me and I'll email it back to you. I honestly got no lies, 250 emails. So between the video being watched and people actually like, so if I missed you in the email sending offing, please email me again, David at FX Bootcamp, and just send me a Nastygram reminder and I'll send this out to you, okay? All right. So hopefully we can cover 2 of these here in the next sort of half hour or so. Would I have considered a short? I mean, possibly. It's not my thing, though. I typically try not to challenge the session direction, right? So, there's pretty little volatility short there or something. The problem is just where do you define the stop on that? So really you're taking on quite substantial risk for a trade where it's going to be a very short-term lived thing. I don't know. There's probably money to be made there trying to trade it. It's just not my thing. Well, I think there's a couple of ways to look at the the amount of the move today. Yeah, it's been stronger than everything else, but really, did we expect us to stay bottled like that for very long? And now we've just had a nice little explosive breakout there. I think it's long to get short. Okay. Right. So I'd like to talk about. We might as well go. I'd like to talk about probably number 2 here, and then we'll try to get to number 3. All right. So one thing that we did a while back at Bootcamp and for ourselves is I've always encouraged traders to put together their own little business plan, their own little set of rules, something by which they trade from. This is always an amazing thing to me. If you were going to open up a donut shop, all right, you would do all sorts of research for yourself, wouldn't you? You would think stuff through. You'd go and work out your signage for outside your store. You would go and negotiate the best rates at the highest quality products for vendors. You would come up with a lot of thought into the layout of your little shop. You would think about, what oil you're going to use to fry your donuts and how you were going to do your advertising and how you're going to get your notoriety and things. And you'd think through all these different things, and you'd work out your little cost analysis and how you were going to go about sustaining this business, etc. Okay? So for some reason in trading, people don't do any of this stuff. They just sit down at the desk, and there's a whole bunch of blinking lights in front of them, and it's just let it go, baby. All right? And there's no real thought as to how to strategically go about being a trading professional. All right. And I think that what Rob Helene, he's got some recordings on this very thing. I'd highly encourage you to go watch those on how to put together a structured sort of way of going about trading as a business. So one of the things that I'm not a big believer in rules per se, but I definitely have some that I follow until they need to be broken, sort of been my motto for life in general. But, okay, and one of them here, I'm not going to run through all of them. One of them for me is this. Okay, I call it I have sort of trading rules in terms of discipline, and then I have trading rules just in terms of how I'm going to enter a trade. Okay? And one of them is this. Okay, one of them is this, certainly. Because I'm big on mechanics in the moment. I'm doing a little bit of private mentoring these days. And I see a lot of people that can plan brilliantly and then have a really tough time just executing. And it's more just about what you're thinking in the moment. And what I mean by that is a lack of confidence when push comes to shove. And often just sort of sequence, routine, and repetition is enough to get you out of that, because it's just a matter of breaking a habit. So, guys, thank you for your attendance today. I appreciate the support. So thank you for that. Everybody's kind of quiet today, but yeah, it's a Wednesday morning. Hey, Dave. 200 million for 10 years? Really? It's going to be 38 halfway through that contract. Okay. All right. One of my rules here is this. Okay. And stick with me here because we're about to get pretty involved and pretty technical. All right. One of my rules is this. Once price has broken the 78.6 fib after a move fib, all right? So remember a fib, we have two, I like to classify fibs in two little ranges, okay? One of them is a swing fib. In other words, a fib of this swing, okay, a buy zone of that swing. Price goes up, makes another swing, or another fib of that swing there. I've got to remember Hotcom's a little bit behind me. Okay? And then there's obviously the fib of the overall rise. Okay, so this is the fib of that swing. That's the fib of that swing. And then you got the fib of the overall rise, correct? So in other words, that fib, which I've characterized as a move fib. Can you guys remember that? Pretty simple, and you guys have heard me say that a lot if you've attended other sessions, right? It's not particularly difficult. And basically, when do you get a move fib? After you have hit a major level of support resistance, or you are broken a swing fib. So the idea is swing fib, broken swing fib. That then becomes resistance to the move fib, and then continuation. All right. So this rule says the following. It says once price has broken the 786 after a move fib bounce, look for a swing fib for entry. What? Huh? Say again over? Okay, and basically it says this. This is where people get ready. I think this is a big mistake I see in trading. All right, if this is happening, okay, so this is what's happening. Right. We come down to a move fib of this rise. Okay. And then price trundles up here off that move fib, right, to the double top area. Okay. I see a lot of folks say, well, this is a double top. Let's get short. Right? And price will kind of come down here, and they'll only, this is the thing, are we doing the subject of today? Yes. In other words, Boyke, you're looking for my favorite early London setups? Well, this is a favorite setup, period. But yes, I will, yes. Yeah, this will put you in, yeah, this is fractally applicable. It's applicable for any time of day. Don't rat me out to Maud because I'm not on task here, please. Gotta go under the radar a little bit. Okay, so can you show me the move fib, swing fib on the pound chart? Yes, I will. Okay, so, all right, so ultimately what happens is this. We come off our, all right, so swing fib, we drop down to our move fib of the rise, okay, and then we get to the double top. And inevitably what happens is that people see this and go, oh my goodness, that's a double top, I need to be getting short. And all that happens is that you just sort of make a swing fib again off the top and continue, right? So you can have two entries here, one long here and the other one long right there. And guys, that long there is as consistent as any other trade ever known to mankind. All right? And the rule is as follows. You wait for price to come off your move fib and then break the 70% of this drop. Right. For 70% of that drop after coming off a move fib, then what you do is you take the fib of this swing, wait for price to come back to around the 40%, and you long bomb it. And your profit target is the fib extension of this whole thing. And if you're good enough to get in at the move fib, this is a perfect reload. So you can be in there double size on the same move. Dean, it makes no difference. 4 hour, weekly, daily, 15 minute, 5 minute. It makes no difference whatsoever. So let me show you. Is it an inverse head and shoulders? No, because a head and shoulders is really designed to signal the bottom of a trend, not really a continuation application. So to answer your question, no. If we're using it in a strict sense of the word. Right, so if you have broken, so you'd measure this drop there, that drop in red, and if you've broken the 70% retracement of that, then you look for the swing fib to get long. Okay? Does this make sense to you? Sort of. Kind of. So let me show you this on so let me show you this chart now. And tell me if you think you can see this chart pattern. Okay. Swing fib. Swing fib. Right? Now we're coming off a move fib with the drop, so you should get move fib with the rise. Right, there's our 50%. That is now our move fib, our fib of the entire rise. Agreed? Now there's nothing wrong with longing that. You understand? Nothing wrong whatsoever with longing that. And in fact, you should. I know because we have the benefit of hindsight. Just depends how you want to execute it. Gangster. What I would prefer to do is, if this is, I've different rules for taking move fibs over swing fibs because of the risk exposure. And if it's between the 50% and the 618, then I'll just take it with a stop below the 786. If price is looking like it wants to bounce before that, then I'll use a shorter term confirmation with like a lower low plus 10 stop. Because longing it twice and losing 10 pips of time is still better to me than giving it like a 50 pip stop and then taking a catastrophic loss. Because you came off a move fib of the drop. So my rule there is move fib of the drop should give you move fib of the rise, Holly. And the fact that you broke a swing fib here, because here is, if you long that, there's nothing wrong with that. Only problem is you're very close to resistance of the drop. Okay. And yeah, it's going to take me a lot that's a very involved question. It's really like a 45-minute explanation if I'm honest, because we'd have to look at about 10 different scenarios, Okay. So now what are we looking for our Rule 9 setup? We're coming off the move fib. I don't want to sell you short though. I want to answer it because it's important. Okay, what are we looking for our Rule 9 setup now? We've come off our move fib. We grab our fib and we point it to the downside. Once this puppy breaks at 70%, right, there it is. Now we have permission to do this. Grab the swing fib and take this trade right here. You're longing that right there based on our rule. Okay, so I'll repeat it. Move fib. Break at the 70% of the drop. There it is. Then you go swing fib, and it comes down there, and there's no execution. You long that. Where's your profit target? Your profit target is the fib extension of this whole drop. Whole rise. Okay, it's a fantastic reload strategy as well. Fantastic. Brilliant. Excellent. Okay. You guys picking up what I'm putting down here? So on our little trade setup document, here's how it looks. Coming up a move fib, break the 70% of the rise there. Look for a swing fib for a continuation play. It works on all time frames. Take a look at your euro dollar right now. Tell me what you think setting up. The fib level you're long of is the same as the previous. Okay, so don't worry, Keith, so much about specifics as it is for the fib level. Okay, look more for confluence at a fib zone. Right, I'm eyeballing this. Basically, I'm saying to myself this. I'm saying, you know how I do things in red zones and green zones? I try to Barney this stuff, all right? There's our green zone of this rise. So I'm saying to myself, I do, Boyke. I do. I'm basically saying to myself, where is the red zone here? In other words, where would there be sellers? There'd be sellers there, right? That's broken. Now I'm just going to pick up the swing fib and go. So, that's just the logic. So take a look at, the question is, well, what time frame does this work? Well, take a look at your euro pound right now. This is a daily euro pound chart. There's your move fib. There's a break of the 70% of the rise. There's your swing fib continuation. Works on a daily chart. No, I use, I do use fibs a lot just because I think fibs are, and everybody's got their favorite little thing. Fibs are a nice way of anticipating support and resistance a little bit. It's kind of laid out for you, if that makes sense. So let me show you a Rule 9 setup on the Aussie dollar just today. Messy, but still very valid. Okay. Swing fib. Broken swing fib means move fib. Right. So we've gone swing, move. Okay. This is the break at your 70%. There's your swing fib now to get short. Yes, it overshot a little bit and we're still yet to extend, but there's the logic in play right there. TV, what is the best FX logic book to read? Oh boy. I don't know. I've never read a FX book, if I'm honest. Honestly, I don't know. Market Wizards? Market Wizards? Best book? Yes. That's it. How exactly do I enter my trades? Do you have your limit orders? Okay, so the question is, yes, guys, if you want a copy of this, email me, david@fxbootcamp.com, and I'll send it to you. And if I missed you in the last go-rounds of emails, I sincerely apologize. Send it to me again, and I'll certainly get it out to you. I think, yeah, Wayne's is a good book. Mark Douglas, good book on Trader Psych. He does highlight a lot of problems and then doesn't fix them for you. So it's like, thank you. I know I have these issues. I don't know how to fix them, and neither do you. Perfect, great. But he also says some good stuff, yeah? Let me answer this question, and we'll talk more about that. Okay. All right. So the question is, how do you exactly enter your trades? Do you enter with market confirmation? Do you have your limit orders? Price arrives at that level. You have limit order. How do you decide what fib level? Okay. So, all right. For starters, confluence is everything, all right? So where you have multiple levels of overlap is where you want to be trading from, period. Okay? There's also a level of discretion. So there's a lot of times where I'll be looking for a continuation trade, you know, and now let's say I'm looking to short here based on the amount of support it's coming off of. Then I'm trying to short in that red zone and price doesn't quite get there and it drops. And then I might move my fib down, and let's say I'm now looking to short here, and it stops prior to, then heads down. A lot of times I will miss these trades just because I don't quite get back to the level I want them to. And that's not because they're bad setups. It's because I'm not prepared to assume the risk of taking a trade in the area that it's going short from. All right? So sometimes I just don't get entry based on a risk-reward decision. Okay? All right. So from that perspective, confluence is everything for me. All right. So I'm prepared to take a 15-minute swing fib with no confirmation, and I just manually pull the trigger when price gets to the level I'm looking at. I'm prepared to take a swing fib on the 50-minute as long as we have not hit a meaningful level of resistance or support. I'm then looking for a move fib if we're coming off a level of support or resistance. So on this, I mentioned this on my tweet yesterday, is we're looking for 80. So why was that a nice short yesterday? Well, because we hadn't really hit any meaningful support. We just defined the direction for the day, and we're just looking for a pullback to resistance to get short, and we hadn't really come off support. Therefore, it's a swing fib, no confirmation. Price gets there, you just pull the trigger. And you just give it a stop up here and whatever. After you've hit support, in which case we did here, previous swing lows, hesitation area, 382 fib retracement. Therefore, you look for a move fib of this drop. You're still trading with the 15-minute direction, but you're going to wait for a larger pullback. Once again, I feel like I'm not doing a very good. I mean, Harley's question, that question about entry, those are like 45-minute discussions by themselves. So I don't want to give you half-baked answers, you know. And you can see that this is a Rule 9 setup playing out right now. There's your short, and now you're looking for continuation. Do I primarily look for this setup on a 15-minute chart? Yes. I mean, I see it developing on all time frames. But yeah, typically it's going to be a 15 minutes. I mean, here's one happening right now on the euro dollar, is it not? There's your move fib. There's your break of the 70%. And now we're going to look for this. So, I mean, you can plan this stuff on a daily basis. All right. Are there any questions about that? I'm not sure I've explained this in the necessary detail that it's going to make a lot of sense, but you'll start to notice it in your trading and you'll have some aha moments. I look for a swing fib then, because it's proven it can now break support or resistance. Proven it to you. Okay. So, you know, let's say something like this happened. Let's say we did this. It came off the move fib of this drop, and now let's say we broke the 70% of that rise. You'd look for a swing fib continuation. All right, trade entry. Wait for it to double bottom, come up, short that thing. If it breaks, okay, so if you were doing this one, here, move fib of this rise, and you took this trade here as the swing fib, and you basically broke back below the 618 of that swing fib rise, then you know that you're wrong. So if you broke that green zone, you know that you're wrong. Boyke, I'm gonna for that one, I'm gonna say watch the video back because I explained that first up. Okay, basically a swing fib is just a swing, the last major swing, and a move fib is the fib of the entire rise, like that. That's the move fib. All right, it's not a technical term, it's a coined phrase. Okay, fair enough. Yeah, past the 786 or a change of trend definition. So price action, change of trend. Do we have time to fire off one more? Do we have time to do one more of these? If I go like 10 minutes over, is that going to be a problem? Okay, so if it's probably better to wait for the whole move for action, no, not necessarily, no. You're not always going to get that. And a lot of times, particularly if you're around a market open or something, and it just define the trend for the day, you're gonna be a day late and dollar short if you wait for a move every time. Okay, I tell you what, I'm just gonna go until until I get told we're out of time. All right, so more and more, see this sort of thing. Okay, so take a look at a euro daily. Yeah. Okay. So I'll put on the afterburners here. No books, guys. I'm barely literate. I'm African educated. I mean, it's a freaking miracle I can read and write, isn't it? So, thank you. All right. So even in this euro drop, do you guys notice, I mean, really how wiki this move is? Wiki. I mean, the euro's had all this catastrophically bad news, yet it's been incredibly resilient. And look at how many of these daily candles have top and bottom waves. I mean, really. Yes, it's dropped, but has this been the cleanest trading you've ever seen in your life? Really? I mean, it's like drop one day, reverse the whole thing, consolidate for 5, drop 2 days, consolidate for 6. It's not fluid trading. It's fickle. It's superficial, isn't it? There's no real conviction. And a lot of that is just because it's what it's trading relative to, isn't it? I mean, the euro's weak, but yeah, it's trading relative to a dog with absolute fleet. Okay. Thanks, Ronnie. All right. So that's part of the problem for this. However, it's meant that every session in trading, to me, has its own sort of market movement. All right. And never in my trading career have I seen time of day as been more important than it is right now. Okay. And this is how I try to characterize things. And all right. So I look at each session as its period of money. Okay. And I compartmentalize my day. And you guys have seen me do this example in previous recordings, but it's really critical at the moment. Okay. So I see Asia to London as its own period of money. So 8 a.m. Tokyo to 8 a.m. London, and then London Open, 8 a.m. London through to around London lunch. So somewhere in the vicinity of, say, 1 o'clock in the afternoon for London. Okay, so 1300 here. Okay, and I'm going to call it London lunch. I see these two blocks of time as two individual periods of money flow in the market. Okay? Thank you, Philip. I think, yeah, if we get time, we'll look at the Aussie. Otherwise, I'll do a video on it tomorrow. How's that sound? Or today? I don't bill, but you can email me for it. I'll send it out to you. Okay. So if we do something like this, okay, let's say New York takes you up and then we open Asia at support, and this is what we talked about last time. Asia is likely to take you up, and then sort of midnight Eastern, pre-London kicks in and continues you. And then you start the day at resistance, London kicks in, and you do this. Oh, wow, that looks like a euro-dollar chart and an Aussie-dollar chart, does it not? And guess what? Yesterday we had the exact reciprocal. We had Asia opening at resistance. It then traded us down. We had a pre-London continuation, and then we had a reversal as London open. Why? Because traders like to buy low and sell high. I mean, really, that is by itself logic that's going to make you money, isn't it? Time of day kicks in. You had S2 on the Aussie yesterday and a previous level of daily support. What do you think's going to happen? It looks catastrophically bearish, but nobody wants to sell it at the lows, at support, at the market open. You break support, well, now you're onto something different. Now you're going to fall through the floor. But if you're holding support at a market open, you're going up. However, this is a period of the market here that we can capture. Is it not? So roughly from midnight Eastern, so 5 a.m. London, or 5 a.m. GMT, through to about 7:30, oh, 7:30, I just drew a 3. Have another one. 7:30 a.m. is a little pre-London trade. Yes, it is. Okay? So if we're going to trade in general between, say, 6 a.m. London and 7:30, what trade direction should we be looking at by default? Yes. Yes, my boss. And you're going to see this happen a lot. So I'm saying that, really, yeah, we've been in a downtrend, but we haven't. Guys, if Asia to London Open is one block of money, and we're trading between 6 a.m. and 7:30, what direction should we look to trade in every day? It's laid out for you. The same as Asia. There we go. That's it. Well, it just depends, Boyke. Okay, look, you're absolutely right. You're absolutely right, Boyke. I mean, you got four options. If you're at resistance, okay, this is a sliding scale. It's a sliding scale, right? Because if you do something like this, let's say that Asia opens you on the highs, okay? And then what's likely to happen is you pop up a little bit more, you go down, pre-London takes you down a little bit. Okay, let's say that Asia kind of takes you down halfway to support, pre-London fades you back, and now you're at resistance, London Open, you're going to go with the Asia move. It just depends whether you're at support or resistance relative to the market open. Okay? But I'm saying that this trade here between sort of 6 and 7:30, you're going to be able to pick up that trade 2-3 times a week for 40 or 50 pips in the direction of Asia, and it's very easy to identify, guys. Okay, check it. And I'm in a hurry here. I feel like I've done you guys a little bit of a disservice today just because we've been a little bit pushed for time. But if you have any questions, send me an email. I'll try to get back to them as best as I can. Okie dokie. So I use Fibonacci, I use pivots, and I use visual levels of support and resistance and psych levels. David at fxbootcamp.com. All right. So this area in pink here, which looks like a blue on Hotcom, this is Asia Open to London Open. Okay. This is Asia Open to London Open. What you'll notice is how many times London is at its lows or the highs absolutely at the open. Crazy. I mean, it's preposterous when you look at it, actually. Here. Here. Right here, a little bit of a support point. But, I mean, at the lows or the highs. So it's just a practical exercise in buy low, sell high. There you go. There you go. There you go. I mean, like the candle is specifically at the highs or the lows at the open. Yes. And all it is a product of people wanting to buy low and sell high. Practical example, you'd be looking for euro to hit some resistance at 34.40. $34.40 to sell it now. No, I think if we're going to get short, you're looking more like 34.10, yeah? I would be cautious because you're coming off a 4-hour trend line and basically you're trapped now. I think you've lost direction on that. I think if you're going to go trading, you need to look at the pound. It's 3 a.m. Eastern or midnight Pacific. Okay, so how do we identify our pre-London? I like to call this setup the pre-London continuation setup. And I'm going to have to rehash this one the next time because I've given you a superficial look at best. Okay, so basically it's characterized by this. Entry is taken between 6:15 and 7:15 London time. If Asia is down, then locate the next level of support or resistance. Okay, you've got to make sure that there's still room for the trade to run. So you're going to have to use it. You're going to have to be smart about how you work out that piece of information. All right. You're looking at, okay, and to do this, you're going to look at longer term visual levels, support and resistance, etc., average daily range. All right. Then find a swing fib support and confluence area to long or short from. It's a no confirmation trade, or you can use a 2-minute higher, lower, lower, high. Target is the next level of resistance. Use a 60-40 ratio. So in other words, if Asia is taking you down 60 pips, pre-London's likely to continue 40 from those lows. Okay? This is a time-specific trade. You can only looking for this trade between sort of 6:15 and 7:15. Okay? Many times, an adequate pullback will not happen, and if that happens, you just leave the trade. Okay, and generally, you'll get this trade about 2-3 times a week, and it takes about 90 minutes to pay you. All right? If this 21 EMA is flat, don't even bother. If you got good angle to the downside on this 21, then you simply look for your continuation trade in that direction. Okay, and you look for it very specifically between 6:15 and 7:15 in the direction of Asia. Okay, so in other words, we did this trade together yesterday. Right there. We did this one today. Okay, and all it is taking Asia direction and saying, right, which way are we going? Great. Where's resistance? Fib, confirmation, short. All right, we did this one on the Australian dollar. Now, these trades are not designed to make you a lot of money. You're looking for the setup like 3 times a week. Okay, so this was the Aussie. Not going to lie to you, it didn't really make us a ton of money yesterday, this one. But there it is. Exactly when you'd expected with the prevailing Asia direction. Just calibrate it just fiddle with it and you'll see it. Here I have it. Asia is set for 3, Asia end is 10. I'm not even sure. I just messed with them until they were right then. Typically the currency moving, Solomon. Because Boyke, it's only a quick setup. It's really only a setup you're trying to make 40 pips out of. And it's pretty a trade you're going to be 2-3 times a week because the filter is when you got no speed. Sorry if I've missed your questions, guys. If the EMA is flat, don't even bother. Like this, how it's dead flat like that, yeah, you continued up, but that's not the application of the setup. Only when you go, so here, no, that's a negative. Here, no, here, yes. Here, yes. Why? Because it's in the time slot and the 21's pointed down nicely. Here, no. Yes, it is. Yes, it is. If you're smart about it and you really internalize this because it's such a specific setup, you can probably make 100 pips a week. Here, look. Asia up. And your time slot, continuation. Here it is again. Sometimes you're going to get a decent pullback, other times not. Asia up. Keep looking for this trade setup, continuation. What setup makes you lots of money? When you have daily down, 4-hour down, opening London net resistance. That's a trade that should make you 100 pips every time to coconut. Or if you have daily up, 4-hour up at support at market open. It's when you have confluence of fractals in your direction and you have the perfect storm built. Providing there's confluence in that area and it hits my zone, I'll just watch for a very short-term lower high in like a 2-minute or something, or just take the trade, period. Right, so let's say I have, and I got to get out of here. Okay, one minute, okay? Send me an email and I'll send them to you. If you've got this going on, right? If you've got a daily chart doing this, and you've got, so you got a daily chart doing this, and you've got a 4-hour chart doing this. Okay? And basically you open London here, and on the 15 minutes you're doing something like this. You now have 3 major market fractals all pointing in the same direction. You're about to fall through the floor. That's a setup that's going to make you a chunk of pips. But, well, nothing's foolproof. Guys, nothing is foolproof. But you know what? Yeah, thank you, Dave. What a shock. But I mean, it's all about probability, but I mean, if you're a 60% trader, you're still going to make a monumental amount of money. Providing your risk rewards right and you don't self-sabotage, you're going to be fine. You know, it's the guy that's risking 20 to get 20 and having like a 50% success rate. He's in a world of hurt. Anyway, guys, my time's run out. I'm stepping on the toes of the next speaker. So I hope you enjoyed the presentation. I tried to cram as much as I can into a very short space of time. Thank you for the support. I hope that I answered some of your questions, and if I missed them, I sincerely apologize. Maud, I'd love to come back and kind of continue the conversation if I can. But otherwise, have a great day. Hope you picked up a little something. And I didn't get an opportunity to look at the Aussie dollar, so I'll do my video today. I'll do my video today on the Aussie. Fair enough. Thanks, guys. Talk to you soon.